Saturday, November 5th, 2016, Monaco 64, home of alternative economics and contrarian views. I like to do an update on the markets and the week that was to see what different asset classes did. Going to be looking at the FTSE 100, the Dow, the S&P, gold, silver, the dollar index, gold and sterling. And then I'm going to look at the big picture and see what these different asset classes have been doing year to date, because I think that's important to keep in mind, the bigger picture. And the other thing I like to note, we know the S&P yesterday closed down for the 9th straight day. And that's the first time that's happened since 1980. So yeah, the technical picture still doesn't look very good for the stock market. And the other thing I like to note, and I noted that in a previous video, and as many of you know, I worked in the financial markets for over 20 years in the city of London. I started out in Switzerland. And one thing that is usually a rule of thumb for stock markets is that the way the markets start out in the first few weeks of January is usually the way that the market will do for the whole year. It's a rule of thumb. It's not scientifically, always correct, but it's a good probability. And the stock market dropped over 7% in January this year, and it was down a lot more earlier in January. And right now, we're still slightly up on the year in the S&P and in the Dow. So we'll see what's going to happen from now until the end of the year. Technically, it doesn't look very good right now. So let's start with, the week that was. Basically, I'm looking at the closes for these markets on the 28th of October, and then the closes yesterday to see how we did on the week. So the FTSE 100 in the UK, FT 100, closed down 4.33% for the week. So not a good week for the FTSE. The Dow closed down 1.5%, and we closed below 18,000, which was, well, we even closed below 17,900, which was a key support. We closed at 17,888.28. S&P closed down 1.94% for the week, comfortably below 2,100 at 2,085.18. Gold, and I'm taking the PM fix on the LBMA. Gold finished the week 1302.80 as per the PM fix. So that was up 2.34%. So gold had a good week. Silver as well closed the fix yesterday was 1830. Previous week, the fix on Friday was 1761. So that's up almost 4%, 3.92%. Sterling, the British pound did well this week, or it was up 2.7%. It closed around 121.85 on the 28th of October, and yesterday it was trading at around 125.17. The main reason for that was this High Court decision saying that Parliament has to vote on whether to trigger Article 50, and it's put the Brexit of referendum into question. I'm not going to talk about, the whether it's right or wrong, but that's what's happened. The pound's gone up 2.7%. But note that the FTSE, though, has gone down 4.33%. So if you were invested in the FTSE, you haven't done that well. The dollar index, that was down 1.3%. The dollar index on the week closed yesterday around 97.06. Gold and sterling finished down 0.55%. I guess, yeah, things can't go up all the time, but actually we did trade at above 1,060 this week in sterling, the gold price, which was a 3.5-year high. And we yesterday the PM fix in sterling for gold was 1,039.895, so basically 1,040. Big picture. So big picture, I just look at most of these assets I've gone through and a few other ones year to date. To have an idea of what's happening. Sometimes we get too myopic. Oh, this thing did this week. It's the sky is falling. So I think it's good to have a look at the bigger picture. So gold gold is up 22.64% year to date in dollars, of course. The S&P is up 2% year to date. Gold and sterling is up 45.16% year to date. The British pound against the dollar is down 15% year to date. The dollar index is down 1.59% year to date. A lot of people talking, oh, the dollar is really strong and stuff. Well, we're down on the year on the dollar index. The Dow is up 2.66% year to date. The 10-year yield, or the U.S. Treasury 10-year yield, is down 45 basis points, so basically just 0.5% on the year. So that means the price has risen. We finished last year at 2.27%, and right now we're at 1.78%. I have spoken before about whether the bond markets have, topped in terms of prices, and whether we're starting a bear market. But as you see, the bond market has still done well year to date. But we are, of course, off the low yields in July. I think in the 10-year was around 132. So the price has dropped since the middle of the year. Silver, for all you stackers out there, silver is up 32.42% in dollar terms, so done really well. And silver and sterling, wait for this, up 57%. I know there's VAT, which is a tax in the UK when you buy silver, but if you buy regularly and you average it out, I think you're still doing well. I started buying silver probably back in 2004, 2005. It was less than it was like 3-4 pounds an ounce. Right now it's almost 15. So that's the big picture. So of course, we can't, I need to talk about what's going to happen on Tuesday, of course. It's the election, and I think there will be volatility in the markets, but I don't think, I think things are already, baked in the cake, so to speak, for the markets. Politics does impact the market as far, as trigger is concerned. But I think we need to look at the direction of the market that we've seen, and it might just accelerate trends depending on the result. But there's a couple of stories here that are quite interesting that might help you. One is from Zero Hedge. Excuse me. It says, market indicator gives Trump an 86% chance of winning the election. So basically, they've looked at how the markets, stock markets, or S&P in this case, performs 3 months preceding election day. And all the way back to 1928, every time, almost every time that the S&P was down, the 3 months, in the 3 month period preceding the election day, almost every time that the S&P was down, the incumbent party lost. And if the S&P was up, the incumbent party won. The only time that didn't happen was in 1956, when the S&P was down 2.6% and the incumbent party won. 1968, S&P was up 6.5%. It was up 6.5%, and the incumbent party lost. And then in 1980, S&P was up 6.7%, and the incumbent party lost. But every other time, 19 out of these last 22 elections, whenever the S&P was down in the 3 months preceding election day, the incumbent party lost. And whenever the S&P was up, the incumbent party won. And right now, in 2016, in the last 3 months, the S&P is down 4.5%. So that's how they've come. This is statistical study. So it could be that it would be 19 out of 23, and Trump might lose and Hillary might win. So, but this is an interesting thing to look at. It is statistic. It doesn't mean it's going to happen. And the other thing I like to point out is an article that's come out yesterday. LA Times tracking poll. Donald Trump still up 3.5% nationwide. So, and I read here, and it's from Breitbart.com. And it says Trump has 46.9% support, down from his high of 47.8% earlier in the week. Clinton went from 42.4 to 43.4. The USC Dornsife, LA Times poll asks roughly 3,000 American citizens each day about the presidential race in order to reflect the political pulse of the country. Results lag events by several days. So that's out there. The other thing I like to talk about a little bit is about investing and trading. And I've done both and still do both. And I think there's some rules personally that, from reading books and from doing it through experience. One of the best rules, I think, is from Jesse Livermore. And he said, by all means, study and read and look at markets, look at what's going on and look at what other people are doing. But when you do trade or invest, be your own man or own woman. Be a lone wolf. Do what you think is best. Don't ask other people what to do. And if you can't decide what to do, and if you're not good enough to trade or invest, make sure that you are. And how do you do that? By studying. Especially nowadays with the internet, unless you're really lazy, there's no reason why you can't study about markets and buy the books and get involved and start slowly. What I do in my videos is give you my opinion and my experience, and I'm not trying to tell you what to do, but maybe help you with the experience that I have. The other rule, the second rule that I think is probably the most important one, and that was when I started out in Switzerland. One of my colleagues, he was a foreign exchange trader, and he said the most important rule about trading is having a set level to take your profit. And he was very right about that, because I've made the mistake in the past, sitting on big profits. I say, and you get greedy and you say, I don't want to get out here because, it could go up more or down more if you're short, and I'm going to, not make as much. So I think that's a very important rule. When you're sitting on a profit, have kind of an objective and take that profit. Doug Casey as well talks about that. When you speculate, if you've doubled your money, take the whole profit, cash that profit and keep, your initial investment. And if it goes up further, you won't make as much, but you still be making money. But if it goes down, you've protected the profit. So yeah, that's rule number 2 that I think is really important. make sure you have some kind of idea where to get out, because you know, markets can move and change very quickly, and the profit can become, you know, a loss. So that's really important in my opinion. And what else? The third rule that I think is really important as far as trading is concerned, and I've done this before because I've traded with futures, and futures are very, very leveraged. I think is to make sure that you do not leverage yourselves too much. The best times that I did my best trades was when I was leveraged only about 3 or 4 to 1. But in the futures, you can leverage yourself 30 to 1. And how did I do that? Well, by having more cash than I needed in the account, so I wasn't as leveraged and taking small positions. I think that's rule number 3 of investing and speculating or trading. You know, don't leverage yourself too much. Of course, if you leverage yourself 30 to 1 and the market goes your way, you'll make a killing. But if you leverage yourself 30 to 1 in the market, you know, there's something that comes out, some kind of news, you know, like when the Swiss took out the peg, it can wipe you out, wipe out your account and more. So yeah, that's it for now for this Saturday morning. If you enjoy my videos, please like, share them, and subscribe to my channel if you haven't yet. If you like to donate, there's some links below in the description of this video. Take care, and I'll talk to you later. Bye.